to, I didn't change the titles on the streams. Oops. Yeah, well. Oh well. I don't think I can change them now after the fact. Yeah, I can. Human Performance Lab. We're going to do working on asset management day 4. And then we're just going to go ahead and throw that in. And then education. Sorry, everyone, just give me 1 second here. I'm going to get covered from blown account. Okay. To get out of here. And here, hold on just 1 second. Well, what I will do is get this over to here. We want the 6th at 0930 in the micro. I'm going to set that. Yes. And I'm going to be back in just a second. Berserker, welcome. Give me just a second, please. So what I'm working on is a strategy for asset management. And today, in that strategy, I was using very mechanical exits in the US session and not exits that, not discretionary. And because I was teaching and trading at the same time. And that combination would have blown up a funded or an evaluation account, either way you look at it. So I am going to go into yesterday. Let me delete all my drawing objects first. I seem to have a lot of them. Okay, good. And so these are my areas from my longer term. We're going to go ahead and go into the pre-market analysis for what I would be doing for yesterday. And I do want to use this as an example for my future work, because I'm trying to get to the point where I can go live as soon as possible. Live and in a, well, it was going to be a cash account. Today, the cash account you would have needed in order to be able to do what I was doing with the asset management was right about $15,000. You would have had to hit about 250 contracts in a micro in order to get out of that account. Maddie, how's it going? It's good to see you. I broke the asset management idea today. So I'm going in to demonstrate with a stop, actually. And I am going to add a stop I have an idea. So we're just going to play it out. You'll see it. We're not in a live environment, so I can teach, I can work with this all at the same time. I'm going to go through that. Came at the right time, right at pre-market analysis, my downfall. Beautiful. Okay, let's get into it. All right, so the first thing I do is I start with, you're on, let's see here, get everybody together here. There we go. What I do is, hold on a second. What day am I on? Oh, you know what? This isn't even the day I was planning on doing. Oh, well, no kidding. It's June 2nd. Okay, I was planning on doing yesterday. You know what? That's fine. Let's just do June 2nd. This will be fun. Don't even know what happened on June 2nd. Know what happened yesterday. So yeah, brand new day, June 2nd. Here we go. All right. See what happens when you make a mistake? You know, sometimes it works out perfectly. So what we have here is the all the sessions thrown into at the same time in the same time frame. Okay, so this is a daily time frame, all sessions. We got Asia, London, and the US. We currently have an inside bar forming, right, in an uptrend market condition. And we have double distribution, really triple distribution on this day. We have double distribution here. So we're accumulating volume at the top of the distribution and at the bottom of the distribution as well. But here we have 3, and we're gaining volume towards the unfair lows. This is showing possible acceptance of lower prices. Again, this is showing possible acceptance of lower prices, especially when we look at all the volume that was done 3 days ago. We're making higher highs, but possible continuation now to the downside in this market. Okay, so what I want to do first of all is index the unfair highs. Okay, this is not to say short, this is not to say long. I'm not coloring it a different color. This is simply to say that at this point in time, we are in unfair highs in this area. We're in exploratory highs up there as well. We have to be very careful of that because exploratory highs means that we could be moving. We're definitely trending in an overall trending market condition. The problem is we're starting to show some signs of exhaustion. See here, we have the double distribution, but we're distributing higher. Price action moved higher, distributed much higher in a lower range. Tried to go higher, VPOC is higher, didn't close at the highs. Now we're trading in value area, high area, same VPOC, but we're also distributing value or volume lower. Anticipation of a possible rotation to the downside. That's about all we have on the perspective here. I don't really want to index anything on the lows. We can definitely go to the high. We can definitely buy the unfair lows in this type of market condition. The reason why I'm not indexing those is because of the high volume, and I want to see them in the context of a shorter time frame chart to see if I can get any better indication of where I would be looking at possible rejection to go long. So in that context, we're going to take this time frame, and this is a daily chart of volume profiles, but it's only the US session. Okay, so we have the US session here. Let me delete all of these. Well, that's actually for all the sessions for the highs. What I want to do is delete this. That should go away now. And then we want to delete this box down here too. Okay, good. Now we're clean. So now what we have is the volume distributing higher here. We have very, very low volume distribution on the 29th of May. But you know what, though? I think the 29th of May, wasn't that? No, that was not. Was that Memorial Day? No, Memorial Day was the 22nd. Okay. We just have very, very low volume on this day in general, which shows another sign of another reversal. So what I am going to do here is something different than what most people will do in their volume profiles. Because of the condition that we're in and reading the profiles themselves. See, it's not just reading value area high, value area low. It's looking at the distribution of the profiles and getting an idea of what the market can do in that context. And what I'm going to do is I'm going to index these unfair lows, if it lets me. Okay, what is going on with this? I just tried to draw that and it freaked out on me. But now I am going to color this red. That does not mean that I want to go short if we come down here. What this means is because I'm seeing the distribution of volume, we have VPOC here from the US session. I'm just going to draw this out. If price action, so rude, pick the wrong one. I'm having issues. I am so tired today, and I'm just now having issues. If we come down, break up, come back down, I want to be a seller from that type of pattern. Okay. Not sure I've stumbled about unfair highs, lows, and AMT. Very interesting. So the reason why I'm looking at doing this in this particular day, and this is a little bit different, but it's the volume distribution. It's this volume distribution from the overnights. The fact that we have so much volume accumulating at the low, it's not going to take much for us to shift lower down here, VPOC shift here to create some level of volume, right, into this area, and we're going to shift down value area low. It's not going to take much volume in here at all in order to be able to do that. And so this area, if that happens, is attractive to me for the downside. Now, that doesn't mean that if it comes down here, we do trade down here a little bit. That scenario doesn't happen. I'm willing to go long. But in this context, if we get below this value area low, I'm anticipating price action to come back down and start testing lower areas of high volume, possibly even the previous day's value area low. Does that make sense? Oh, what is an unfair low and what makes it? Oh, gotcha. Okay. So when you look at these profiles, right? Let's go to a different day because I've already drawn on that one. When you're looking at these profiles, right? And depending on how you have your settings for your value areas, mine's just set to 70% right now. You can set it to 80%. You know, it doesn't really matter. It's a trader's choice. I'm on the daily chart, so I just do 70. In between this yellow line and this yellow line is what we call the value area. It's value. 70% of all volume has traded into that area. Okay. So 70% of all volume is traded within this range of the profile. Okay. We have a high volume, high volume, high volume. What happened? The value area low attracted to the high volume area, right? Rotated, spent time between these two areas, and then came up with very low volume and pushed higher. That's kind of what I'm expecting for this day to happen, but on the downside instead of the upside. Now, above this profile and this white here, that's your unfair high. And the white here is your unfair low. It's what your unfair high, unfair low of if you're running losses, just join my gold traders in TikTok. This is for everybody, right? For the community. If you are running in losses, just join my Telegram group for recovery. So yes, please definitely join the recovery group for gold traders. It might absolutely be helpful for you. You know, it's so funny. If you're going to spam somebody's chat, find somebody that has a lot more individuals in there that hasn't just started out. You might do a better job of scalping individuals from a larger community. Just go ahead and try that next time. Now, in the context of the unfair highs, unfair lows, all it's doing is looking at the range of volume that traded outside of where 70% of the volume traded. Does that make sense, Maddie? So now you have your unfair highs and your unfair lows. And what I do is when I'm looking at a rotational market, like we're rotational in here, what I want to do is index the unfair highs, index the unfair lows, and I really want to go long in the low volume area of unfair highs and unfair lows, and I want to go short in the low volume area of unfair highs. Why? Because price action to create a low volume usually does not trade very long in that area. So if it gets down there, I'm anticipating rejection. Okay, I get it now. Didn't know that what was it was called above value area high unfair because it is outside of value. Crazy, never heard that way, but now I know. Cool wording. I'm gonna use that now. Yes, exactly. So yeah, you got it. You absolutely 100% got it. It's just, you know, it's just the context and the wording of trying to explain auction market theory to individuals that, you know, don't have a PhD. I don't have a PhD. And so you start reading books in auction market theory and it just starts talking about these words and uses crazy terms and those type of things. So I just try to make it simple. Unfair highs, unfair lows, looking for low volume nodes, rejection outside of those areas to come back into value unless you start trending. And I'm looking at this area of value beneath us on the Asian London time frame to attract and possibly create a pullback in the market on this particular day. That's it. So yeah, still them. Anytime you hear a term that I might be using that I like it, absolutely still it. I don't trademark anything. We're good to go. So yes, now we have our perspective, right? And what's going to happen is, because, you know, I'm using your favorite platform of deep shits, right? I love that. Yeah, ass. Oh, good times. It makes me laugh. You know, you're gonna laugh at stupid stuff sometimes. These now are indexed on the 30-minute chart someplace. So let's first get all these taken off. And now what we want to do is look at the overall profile on the 30-minute chart. You should tell I don't even have any volume or anything done on this chart. So this is brand new clean. All right, Maddie. Maddie's over here laughing. All right. Where would you put your volume profile, your custom volume profile in this chart? Can you identify the high for me? Would you put it, or the bar? Would you put it on the, I'm gonna give you some options. Would you put it here on the 830 bar? Would you put it here at the 8 o'clock bar, the 2000? Would you put it here at the 1030? Just short. One thing I just discovered that 1 minute candle starts to fades down, like it reduces strength of the price, and there should be the correct time to see big trades. Interesting. I need to take that post. I need to put that into Discord real quick, and I need to add that to the stuff I'm working on for you this weekend. Give me just 1 second to do that. This I'm putting into Bitcoin. Where's our Bitcoin thing at? I thought we created a Bitcoin section in Discord. Let's just put this in markets for right now. I want to take, well, I don't want to create a post. Damn it. Whatever. We're just doing that for right now. Sounds good. Okay, it's in there. All right. I'm definitely going to take a look at that just short when I start doing the Bitcoin stuff for you this last week. So Maddie, to get back to my question for you, you want to put it let's just name these. We're just going to name these, all right? And my drawings are going to suck, so you're just going to have to accept it. 1, 2, 3, 4. Where are you wanting to draw your volume profile custom on this chart? Just short, you can answer 2 if you want to, or anybody else. Anybody, actually. Yeah, absolutely. I love this. Okay, we're going to do a poll. If you want to put a custom volume profile on this chart, where would you place your volume profile? Your volume profile. 1, 2, 3, or 4? Any ideas? Did everybody just leave me? Okay. This is what we're going to do. Delete all this, and I'm just going to show you. You want to put it here. On this bar. Why? That's the bar that closed above your previous range. This is your decision bar. This is the bar that tells you the market broke out. And in a breakout, thank you, Just Shorts, 4. You said 4. 3 for me. The reason why I use 3 is because of this. Price action broke out of your previous range. That's your breakout. Okay, it's not a high. It's not a low, it's the breakout. That's the bar that signifies the market shift. This is the bar that's going to tell us, do we continue a trend or do we break down into prior value? And in this case, we put it on this bar, we come down to value area low, we trade back up into value area high, and now we have value. From this point right here, value is confirmed. This is now a confirmed developing value area with our prior static value area that exists here. Why doesn't it exist here on this close? Because we didn't have confirmed value in this area. Price action broke out here, but came right back down into value. You can absolutely put 1 here if you want to. But in that context, we close right back down into prior value. This is no longer a valid profile that we would ever use. Our profile comes right back to here. So I always draw my volume profiles on a significant bar, not a significant high or low, a significant bar of market shift. That's either going to shift the market into a new area of balance or move it back into the most previous area of value. 1 can be used to set the set target though. 1 can absolutely be used. Any of those can absolutely be used. I'm just explaining to you why I use 3 in my setup for auction market theory. Every single one of them is possible to do or to use. I use 3, and that's the reason. Not because it's right, just I chose to use that. And so I can only go off of my reasoning and my basis, and then having that explained to individual, or to be able to explain it to individuals for those reasons, and then individuals can choose if they're going to use that or not. And so there's the basis for what I am doing there. Now, we need to come back to the 300 area because my red line didn't get drawn in there for whatever reason. I don't know why it didn't get popped in here. So we are at 307 and then 269. So 268, 271 is close enough. That's fine. 271 is fine. And then we're looking at 307. Something like that. I can't even see my numbers over here. That's too scrunched and too much information. I don't want to delete that. I want to delete this real quick so I can see that number. 3. I was almost right there, wasn't I? 3, 15, 13, 10. That's fine. Okay, let me draw the volume profile back on here. So now I have my area of value. And then I have my unfair lows, my unfair highs. Up here, I have unfair highs up here, or an LVN up here that I can index for an area of possible rejection, area of possible rejection up here. Now, we got to remember, we're in the context of a near exploratory highs in an overall trending market condition. If you're going to short up here, be extremely, extremely careful, right? But we already went into the context of what we're looking for a movement down from down here. On a scale of 1 to 10, how much you trust liquidity heat maps, and can you tell me your strategy of using... Okay, so heat maps on a scale of 1 to 10, how much I trust liquidity? I'm at a 0 right now. I have a heat map up. I haven't worked out a way of finding value of using that heat map. And so right now, the value to me of a heat map is 0. The usefulness, not sure. Depends on, your context. Delta. I used to do a lot of stuff with cumulative delta. A lot of stuff. I would look at divergence. I would look at all sorts of stuff. I would look at even just micro, here we created this higher high here. We have a tick, right? So we have a seller that came in here at the same time, right? And we're seeing that little down move in there. So the micro aspect of it, I've looked at. I have delta up because it's like having a security blanket, right? I had it on my charts for so long, I have it up. But I was using cumulative delta before I learned volume profiling. And volume profiling has basically replaced cumulative delta for me. But I don't like looking at my charts without having cumulative delta because I feel like I'm missing something. So it's much more of a psychological tool that's up there for me than something that I use. However, I will still use it from time to time, right? When I see price action moving higher, delta is coming down, I look at it as somebody's lying. Price action or volume is leading, and one of them is going to start following the other. I don't know which one yet, but one of them is going to start following the other. That's when I'll start looking a bit more into my volume bars, other things along those lines, looking for a sense of rejection in price or acceptance in price, depending on trying to get a read on which one's going to be leading or which one's leading, so I can either move in the opposite direction of price or find acceptance in price to move in the direction that delta is moving. That's all I use it for. Nothing crazy. But I have, and it's not, I don't think heat maps don't work. It's just, I haven't figured out a way to work them into my system yet. And so that's my pre-market analysis. Those are my areas of my longer term charts. These are the unfair highs of the overnight markets, this big, huge block, right? These are the low volume nodes of my current developing profile. You know now how I draw my custom profile. We're trading in unfair highs currently, right? We just recently came off of value area low. And then I have my area here where I'm possibly looking for a short because of the triple distribution that we have in the current bar for the overnights and the US session. The US session hasn't started yet, so just the overnights. But in Asia and London, we developed so much volume towards the low of this profile, I'm looking for it to be touched again. So there we go. Now, any questions on that, Maddie? Any questions on the pre-market analysis? Anything that I can help you to create your own plans, right? I'm just here to help you. I just give you tools and information that you can then use to develop your own plans. So if there's anything in there that I can help you understand, let me know. And we're going to go ahead and hit play. So currently we're in our unfair highs. Yeah, I agree. Back tested this divergence of CVD and prices decent success rate of 47%. I think heat maps should be last to see or only to see when you are already in a trade to see follow through. Yeah, and I agree with you on that. But even with follow through, I mean, with the heat map, I still haven't necessarily seen that because if you're doing volume profiling, you should already be assuming where price action is going to go. And if I'm going to use the heat map for direction, I could use it possibly for a scalp, but if I'm doing a scalp, I should just be trailing my stop because there should be momentum. And so I don't need the heat map to show me momentum because I can already see it in price. Rejection, I haven't figured out how to read the heat map yet for rejection. Doesn't mean that you can't. It means I haven't figured out how to do it yet. Okay, that's one of the reasons why I still have it up. I'm still practicing and working on that while I'm live. I haven't been able to work on it too much because anytime I'm live right now, I'm trying to teach so much that it's difficult for me to be watching that at the same time, but I'll still glance over at it from time to time to check it out. But I just haven't found a way to bring that in. Divergence of cumulative delta, can it be helpful? Maybe in some cases. Yes, I used to use it. Yes, I used it on rejection. Would it give you false signals in a trending market condition? 100%. I trade just fine around value. You give me a ranged market imbalance, I'm going to be just fine. I can trade between 78 and 84% accuracy in a ranged market without any problems or issues, period. Using a stop, I don't even care. You give me an imbalanced market, a trending market, and that decreases significantly because of the market shift. And that's why I use that shift to index my profiles, because it's a physical reminder for me as well that the market could be shifting direction. Some market shifts that I have issues with. I can trade, and then before it was very difficult because once the market starts trending, how do you utilize volume profiling to get yourself into a position for a trending market condition? I figured the answer to that. So once I start trending, I'm fine, but not the shift. And hopefully we can get into a trending market here, and I will show you guys how I do that in a trending market. Doesn't mean it's going to work for you. It doesn't mean you're going to like it. It's just a tool that I use for that purpose. And I go right back to my volume profiling so I stay consistent. Okay, let's play. Open of the market, price actions immediately trading lower. Do I have another volume profile here developing? Well, that was dumb. And then let me extend this out. There we go. Beautiful. Perfect. Okay. What should be the easiest risk reward like on day when it's too choppy? I don't, one, if it's really choppy like that, I stay out, and I have ways of doing that. And I'll have to just show you on a choppy market, trying to explain it to you. You just, this is why I demonstrate things. You have to see it. Okay. And then risk reward, I don't pay attention to risk reward. I don't even care. I don't care. It does not matter to me. Risk reward. Risk reward is great if you're all in and all out, or even if you're scaling out. If you're all in, risk reward is extremely important. If you're scaling into positions, risk reward now really does not matter. What matters is expectancy. And so we're already coming off of unfair highs. We basically came into the low volume node off of the highs here. Price actions retracing back up into that area, rejected, and now at the open, we're just trading lower. So at the open, we're not trading. I'm going to go ahead and move this forward a little bit for the first 15 minutes because I don't trade the first 15 minutes. So there's no point in us watching this in a time frame where I'm not going to be taking any trades anyhow. Let me bring this down here and let me take these off here. I don't want to confuse anybody with that information on that chart. There we go. Okay. And then we're going to go ahead and move this forward just a little bit. Again, just for that purpose of I don't trade in the first 15 minutes. So we're going to move this up now. So TikTok and everybody else can see it, hopefully. So this is actually a good example for you, Just Short, okay? Just check this out, right? Choppy market's going to look something like this, and what you're going to have is very tight overlapping VPOCs. As soon as I get into that type of market condition, I'm out. I'm not playing. I'm waiting for a breakout. I'll wait for a breakout and a pullback back into the range to go into the direction of the breakout. But I'm not trading at all anywhere in that type of market condition. When I start getting really close on VPOCs trading in that type of range, it's not worth it to me to try to trade that. Does that make sense? That's how I look at chop. That's one way, anyhow. Another way too is, a lot of chop will come into areas of value. And when you're just cycling through value, I just won't trade that value unless it's wide enough. And for me, wide enough is at least 10 points between what would be considered value area high and value area low of that particular range. And if I don't have 10 points of a range, then it's not viable to trade, because to me, if you don't have at least 10 points of profit, which is $200, why are you trading it? I'm confused in your candlestick settings in this choppy situation, as I can see there's too much sell imbalance as well as buy imbalance. What do you mean? Are you talking about the dots? Is that what you mean? I don't understand your question, Just Short. I'm confused in your candlestick settings in this choppy situation, as I can see there is too much sell imbalance as well as buy imbalance. What are you referencing in that? And I wasn't calling that a choppy situation. I was saying that is an example, right? We're not in a chop this morning. Just an example of if this was an extended range on the number colors are red as well as green. Okay, yes. So your green here is the buyers, your sellers are the red. Okay. I don't pay attention to the colors on my screen. Okay, I don't. They are automatically colored, right? So I don't pay attention to the dots. I don't pay attention to the green. They're just colored The it's just a setting, and I don't mess with the settings because I don't trade colors. What I'm doing in this context is I'm watching price actions closing at its low. We have sellers down here. We're rejecting highs. We have a doji bar, which is basically the market telling you I don't know what direction I'm going to go in. So we have a non-directional bar after a nice bar telling us we have direction and confluence. Confluence meaning we are looking at testing the lower range where high volume is. That's the direction we're going in. An inside bar, which is telling us I have no idea what I want to do, followed by a doji bar. I really don't have any idea I want to do, followed by now sellers starting to come into the market. Now I want to see a breakout of this range and then a pullback. Now this is where the dots and stuff become important for me. Recognizing and being able to read support and resistance, not just in price, but in volume. And so what I have, 2 minutes for any reason, just something I'm just comfortable with. I used to adjust my time frame based off of volatility between the 5, 10, and the 15-minute chart for my entries. The 2-minute chart, the 5-minute in this type of market condition can just be really, 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 really wide. And there can be a lot of dots and a lot of information in one bar. Trying to find the pullbacks is a little bit more difficult. Here, it's just easier for me to see on a 2-minute. So it's just pullbacks is what I'm looking for. And I'm utilizing volume areas for my support and resistance. If I'm doing auction market theory and I'm doing volume profiling, why am I looking at bars and just price data for my support and resistance areas? I'm using volume. That's where I use my volume. That's why I have number bars. That's why I have all of the stuff on my charts, right? That, and I can look at the numbers here and say 400 sellers followed by 200 sellers, which is about the same amount here, and we're breaking lows. I'm not seeing rejection there. I'm anticipating a continuation to the downside. When what we do, we cycle back to the high volume before we made the low. And what would that high volume area be there for me? That's your resistance. And buyers before we broke the low, right? Buyers bought in to test that area, or price action came back to test that area. And then sellers immediately came back in, defended that area, and that's when we started making the lower lows. And we just came back and tested again, and now we're testing the lows again. That's telling me that sellers are there at that resistance level. Doesn't mean they're going to continue to be there after we keep testing it, but right now we have sellers in the market willing to sell higher prices to bring price down into lower lows. That's how I'm reading volume. That's how I'm reading all of this information. And I use volume for absolutely everything. Support resistance, my overall plan, everything. And then I'm just looking for price action to give me particular direction within value. And value being volume. See, we're testing that whole area again, right? Sellers got aggressive at this low. We're coming back and testing it again. Sellers are still willing to defend that price and bring price back down into the lows. This is a very strong area of resistance right now. Extremely strong. And it's not the dot. It's the high volume area it's representing. And if you look, high volume here at this low, high volume here at this low, 700, 700, 500, 300, 300, 400, 300. And then look down here, 1100, 1100, 1200, 1300, 1100, high volume. Now we just immediately came back up there. Now we have some rejection down here. Now we have rejection. But what is rejection? Rejection is a change of direction. But we don't know it's a confirmed change of rejection until what? In order to trend, you have to have higher highs and higher lows. Well, the market hasn't made a higher high yet. So I wouldn't even be thinking about this as rejection. Just because you have a wick doesn't mean you have rejection. If price action hasn't made a higher high, there's no rejection there. Sometimes the market will make a V pattern rejection area, right? So it looks something like this. Price action just comes down, and then it turns around and immediately goes right back up again with no pullback. But most of the time, after a higher high is made over here, in this context, right, price action will come back and test a lower area before it starts to resume the upper area. And where does it usually pull back to? The support and resistances we see in volume. And that's why I use volume. So I don't have any confirmed here anywhere. Okay, so just shorts. When I trail to these large trades, it always takes it. So I decided to just do 25% or break even, rest, leave till 100%. Yeah, I mean, absolutely. It's definitely a viable strategy, right? You've got to see what you see in the charts. You're a quant. You break things down. You look at the numbers. You do the mathematical quantitations on everything. I'm not that intelligent. I'm just not. I need to be much more about observation, what I see. And in that observation, because I'm not such a quant individual, I just see things. And over time and seeing things, being in the game for as long as I have been, I just start putting things together. I see this, okay, it's working sometimes, it's not working sometimes. I see this is where it's not working. Now it's starting to work a little bit better, I'll include that. And I just keep on going and going and going with that until I find something that's pretty consistent for me. I'm much more of just kind of a discretionary trader. I don't have a lot of rules. I look for confluence in ideas. And in that confluence of ideas, I follow that confluence in ideas. That's the best way. I don't know. It's the way that works for me. I don't think that there is a best way for trading. I think trading is all about you need to know yourself. You need to know your personality. You need to know how you learn. You need to know what modalities you work off of. Do you work off of sight? Do you work off of touch? Do you work off of auditory digital, talking to yourself in your head? How do you work? And then, because that's all going to drive your perception. And so once you understand that, now you can turn around and you can set up your charts based upon that information, right? What works? What do you need to see to work within your particular modalities? Then once you get those modalities figured out, you can set up your charts and everything the way that you want to see them for that modality. And now you can turn around and start creating a methodology or an observation. You create an observation aligned to your modalities, and now you're able to start seeing things in the charts. Most people just turn around and put charts up and start looking at it, have no clue. You have to know a little bit about how you tick. And if you don't know how you tick, you're just going to be complete trial and error all the time, because whatever's controlling your internal state of being right now is going to be the part of you that's going to observe the charts. Why do we go into bad habits and those type of things? Because when we are sitting down in the charts before the age of 25, our environment is able to shift or change the structure of our brain, the synapses that control the way we act. At the age of 25, the environment no longer has that type of control. The brain structure is pretty much set. The only way the environment changes your brain after you're an adult is pretty much through some sort of adulthood trauma or an illness or something along those lines. Because the brain is already mapped out its predictive nature by the time you're about 25 years old. And it's just like, you know what? I don't need more information now. This is all pretty much set. And I'm just going to predict your behavior because I pretty much know every single situation you're going to get into. And I know how you should behave based upon historical behavior. And if you take that information to the charts that's constantly updating with new information right now, you're stuck. You're stuck because you're viewing the charts through a mindset that's stuck and can't change to the environment. So you're constantly coming to the market the same way every time, except for now you get highly emotional because you're not getting the results that you want. And now that emotion changes the way you perceive the markets in the first place. That's the key that people are missing, but they're not missing it in trading. They're missing it in life. This is why I use trading as a demonstration for this process. Because trading is a place where I can go in where there's pressure. I don't care. It could be on sim and there's still pressure. Every time I come in, there's pressure. And that pressure can change, can shift from my conscious participation in the markets to all of that programming to come online. And now I'm taken out of the game. I won't get the results that I'm looking for because I'm taken out of the game. It takes conscious participation to focus on an intention, something it wants, to align action to whatever is wanted. That creates fulfillment. What's fulfillment? Action aligned to your intention, and your intention starting to manifest itself, to show itself in your external reality, in your results. And when you start getting action aligned to the results that you want, you start living the intentional life you want to live. You fulfill that intention. And when you have a fulfilled intention, you feel fulfilled. And when you feel fulfilled, there's joy. Because you're no longer stuck in life. You're not stuck by your habitual behaviors controlling the results of your life anymore. You're now on the court, impacting your life through your focused intention. And the one key that's missing there is urgency. You need to act now. And why the markets is a demonstration? Because now is the only thing that exists in the market. We can do our pre-market analysis all we want to, and we can go in and analyze the dynamic information, the static information all we want to. But once it becomes dynamic and we start to sit here and trade, the only thing that exists is this one bar, this one moment, right here, right now. That's the urgency to bring your intention into your results right here, right now, in this moment, on this bar. Not the next bar, not the last bar, right now. And if people get that, then they realize the urgency to do whatever their intention is outside of trading. That's really what this work is about for me, Just Shorts. It's not about creating the perfect trading methodology. It's not about trading perfectly. It's not even about trading at all. It's about demonstrating how we can bring conscious participation online so we can start living intentional lives. I just decided last year to go with the flow, not chase any particular target that just changed me. Yeah. That's it. And where's the flow? In this current bar. Not in past results, not in what you want to do tomorrow, not in the results that you want to have at the end of the session, right now, in this moment. And when you let go of the other stuff, all that's left is the urgency of right now to do something, take action that's aligned to your intention. Because if you're not in this moment doing that, something else is taking action for you. And if you're having a hard time trading, what does that mean? That means that you have a program, subconscious processes in your brain that are not aligned to the results, positive results in your trading. And as long as that part of you comes onto the court, sits down in this chair, views these charts, and takes action, you're never going to get the results that you want, because it's not aligned to get the results that you want. And if you're over the age of 25, the environment, the market itself is not going to change, doesn't have the power, doesn't have the capability of changing those patterns. "100%. Thank you for understanding. I appreciate that. That's why I'm here." So I'm not a quant guy. I'm not anything else. If I'm anything, I'm a head guy. And that's it. That's what I am. And I'm just demonstrating trading. And it's so funny, right? I have never, ever, ever in my life broken down charts the way that I am right now. I'm trading lights out comparatively to how I ever traded before. You guys don't get to see that. You see me now, you don't see the development. I'm on a whole other game. Why? Because it's not my programming that's viewing the charts anymore. I'm here because I understand how this works now. And I'm here present with my intention and my focus, and it's bringing this information out. Not my programming, not me, conscious participation. And that is influencing the individuals that are watching me. I had somebody come on yesterday, Cat. I can't remember the first portion of their name, but they're like, "I'm up $19,000 today because of your advice, demo account." Still in a demo account, up $19,000 in a day by taking the information that I'm sharing with them. Why is my information spot on? Because 33 years of experience of looking at these charts is talking to you from looking at these charts, not filtering them through the perception of my past, of right now. That to me is why this is so powerful. And I'm able to experience that internally because I know how I used to look at charts comparatively to now. It's very wild, Just Short, it's very wild. I haven't shared that with anybody yet because it is so wild. I haven't even necessarily come to terms with it myself yet. But let's see how it works. And you will see me. You will see me break down and start doing stupid things in the market sometimes. I will literally start trying to short lows, right? In everything I teach, I'm like, you shouldn't do that. But I will at times because my patterns come back online. And the moment I notice my patterns come back online, I need to sit here to shift, to return, to live the return so I can live my conscious intention in the moment here in the charts. I'll get off my soapbox now and bring it back to trading. I hope I haven't absolutely lost everybody in here. I hope people do understand where I'm coming from. This is not some spiritual, mumbo jumbo. I'm not a guru. It's not like that. It's the demonstration. How do we get to where we want to go? Just Shorts, thanks a lot, sir. I learned a lot again today. Have a great day. You too, Just Shorts. Thank you so much for being here. I always learn a lot from you as well. Have a good one. Enjoy. All right, let's get back into it. So, price action now has possibly rejected from the lows, but we haven't made a higher high. And so you have to think about this in the context of a trend. Can we get just a normal V-shaped pattern for a rejection? Of course. Does it happen very often? No. And so those ones are just somebody else's opportunity. I'm not playing. What I'm looking for is it to come up to break this high, to break it. Now price action has confirmed it wants to move higher. Okay? Price action has confirmed the rejection. I don't have to confirm rejection. Price confirms rejection. And then do I buy the breakout of that? Absolutely not. I'm looking for the pullback, a pullback to support areas supported and created through volume. That's it. If you could understand that concept, that's it. And then I scale in based upon those volume areas. So let's play this and watch this out and let's see what happens. We're going to go ahead and go long down here just because I can show you these concepts put together. I don't have an area to go on long down here, but we're going to go long off of initial balance today and we're going to see what happens. The first thing I need to see off of this rejection is a higher high. Okay, we just broke the high by a tick. Is that really higher high? Well, I confirmed that through volume. Look at this, 600, 313, 123. I'm actually showing acceptance here at the higher high. I'm not seeing rejection up here. I'm not seeing sellers absorb the buyers. I'm anticipating this to be tested again. Please, by all means, come down here to this area. Please, by all means, come down to this area. Give me reasons to go back in. Give me reasons to get into the market to retest the acceptance at this high. Please threaten me with a good time. This is going to be important depending on where we close and this value this value area is. We'll get there in a moment. Okay, we're not there yet. But right now, this is an area, this whole area right here is of importance to me. Oh, look, we just broke out before the pullback. Okay, fine. We still have that acceptance up there. But what usually happens, buyers don't just go crazy. We test where the sellers were once strong to see if buyers are defending. Where are the sellers strong? They're strong in here. They're strong in here. They're strong in here. And we want to come back and test to see if buyers are going to get strong in those areas. If they reject out of those prices. This is how I used to trade. I would take a range of a day and I would say, okay, that range tells me I can take this amount of risk in the market on this particular day. I would take an area like this of high volume of auctions, whatever it might be, and I could have a stop down here. And if that stop was within my risk limit based upon the width of the market, I would put an area in and I would just enter there all in. And then put my stop down here. And then scale out of the position with very tight scales, or very tight targets in the first targets, and then move my stop to a break even so I locked in profits. The problem is you take a loss and you take a pretty large loss because it didn't go in your favor after the pullback. So we still haven't had a pullback, right? Price action's just moving higher. We'd already saw the acceptance. Price action's moving into these areas, right, of high volume right here as the price is coming down and rotating back higher. Now we're starting to get a pullback. We're not in an area yet that we can actually buy this. We have one right here. Just whatever. And so I'm going to go ahead and put a limit order in to buy two so I can participate in this movement. Where did we just pull back to? The high volume of this current bar. We found buyers there. Enough buyers that we moved that VPOC up and now price action is moving again. This might be one of those situations where we just don't get a big enough pullback to get an entry. And that's okay. Somebody else's opportunity. We didn't miss out on anything. We were here in the moment to participate, and price action didn't do what we wanted it to do. Now it's leaving without us. Okay, that's fine. It can do that. It's prerogative. I don't control what the market does. I can only perceive information from what I see in the charts and allow that to dictate my actions. What the fuck kind of chart am I looking at? This is called a footprint chart. What we're reading is so let me show you. You're on TikTok. No wonder why you don't understand me out. Let me show you. Okay. Here. You really want me to boggle your mind? This is a volume profile chart. This is a daily chart, by the way. This is daily. Okay. And it has all 3 sessions in it. All right. And it's volume profiling. What the orange represents is where 70% of volume is traded within a range. Value area high, value area low is what we call them. Okay, these 2 lines. Okay, everything in between is volume. Okay, everything below is volume, everything above is volume. So we're not, what we're doing is we're taking time, right? Instead of price, volume at price over time. Okay. And so what it does is it gives us areas where a lot of volume traded in places, very little volume is traded in places, very, very little volume is traded in places. And we can use this information to give us places in the market where we want to take action. That's all we're doing. And then that we utilize this. Now you're on TikTok, so let me make sure you can see it. We use this chart, which is a 30-minute candlestick, just regular candles, but we put a custom volume profile on it that we draw that gives us the same information. And now I can see in unfair highs where volume outside of the 70% traded with low volume nodes that we can see as possible rejection for price to trade to the downside, anticipating price action to rotate in this area, coming off this area to move down to the value area low, come down and test unfair lows, low volume in those areas down here for possible rejection to the upside. And these are my areas where I'm willing to do business in. And in value, I'm willing to scalp. So I take day trades in this area, and I take scalps in this area. Scalps in the direction that price is going, anticipating it to move to the other area of value. And then, of course, scalps doing the same thing if we come up. So shorts as it's coming in here on the scalp, right? And then in these areas, day trades looking for longer moves because we're going to reject what does low volume mean or unfair lows. That price volume hasn't traded a long time in those areas. They traded a very short amount of time. In order to make this type of volume in here, price had to trade in those areas for a good amount of time to allow that volume to distribute in the area. And so when it comes in this area, I'm expecting it to spend little time there, reject, accept in these prices. And so the rotation, if it's a day trade, in the rotations, I'm going to stay in with the expectation of moving back to the other side of value. And now I have my targets, and now I have my places where I can scalp. Now I can take scalp trades and turn them into day trades. And I can put this on any time frame chart that I want to. And now I can day trade, swing trade, and position trade all at the same time with one single entry criteria. And then, because that's not confusing enough, right? I then turn around and I do my entries based off of volume. And what we're seeing in here are the candlesticks, but we're seeing the volume, total volume on the bid and total volume on the ask. And now we know where buyers and sellers are aggressive at with inside the bar. Now we can see rejection, we can see acceptance, excuse me. We can see rejection, we can see acceptance, we can see sellers getting absorbed, buyers getting absorbed, all by the information within our chart. And now we have a really good idea of what the market's doing, what we can expect to continue to do, where we would expect price action to rotate to pull back to, and we have areas of entering, all of that based upon the information that we see. It's called auction market theory. And this is called a footprint or order flow chart. Number bars, footprints, order flow. It's all it is order flow. Order flow of the bid and the ask at particular price in confluence with volume profiling on longer time frame charts and daily charts. And I was looking at this as rejection. The rejection was confirmed when we broke this high, and I was waiting for a pullback into these areas to go long, and we just didn't get the pullback. So this is one of those V formation trades that just go, and I didn't have an entry, but I'm still waiting for a pullback to enter on a scalp. A lot of information, I know. Stick around, I can tell you how to read it if you're interested. It's the only way that I have found that allows me to be able to anticipate market direction, continuation. And so what we just do there, price action came up and tested where sellers or buyers were in control of the market, and we rejected from that area. And now we're coming back into that area, testing again. Sellers are getting strong here at the low of the bar, which is a sign of rejection, because who sells down the low of the bars? Not smart money. I don't like that term, but other people do. What do I mean by smart money? Institutions, individuals with money, right? They're not shorting down here. And so now I have my pullback to high volume areas, which you expect price to rotate around high volume areas. Now I'm looking for a rejection out of that area for a continuation of the buyers to move higher. Price action just moved up. Buyers went through the open of this bar. Now we're looking for a continuation to the upside for this high to break. Now let's watch the volume inside this bar around this high to see kind of what's going on. We have 700 buyers, 400, 200, 300. We have 400, 400, 400, 100. So we have less buyers, but less buyers right now are willing to break the high. And now we break the high and more buyers come in. This is a sign of strength that buyers are in control of this market and looking for a continuation move outside of the high of this bar. And we can see that because volume is telling us that buyers are accepting the high rather than just seeing a candlestick and seeing a wick and thinking, oh, well, that could be possible rejection. And then where am I looking for this to go to? I am looking for this move right now to come back and test high volume of the London and Asian session, which is also included in the US here too, but the US just opened. That high volume is right here at 546. So I can put a limit order if I wanted to on this chart to sell one just below 546. And why would I put it just below 546? Because I'm expecting 546 to be the magnet. And in order to get it out with a limit order, you have to be filled through it. And so I'm going to put it just below, so the magnet bringing it up there is what fills that limit order. Now let's see what happens. And then if I'm scalping, I don't even get out of the market at all. I just take in and I just start trailing my stop. And I just trail my stop. And I'm trailing my stop below high volume. Why? Because I'm anticipating price action to rotate down into the high volume like this, right? And then if buyers are strong, we're going to get back above it. But wait a second, we haven't gotten back above it. We're still going down. We just tested where the strong buyers are in here. And now, if buyers are strong, they're going to get past the high volume and test the high and break the high. And so a candlestick forming, you just kind of got to go with the candlestick and what the candlestick is doing. When you have volume and you understand auction market theory and profiling and how volume really controls and dictates the pace of the market, you know how your bars are forming. You know why they're forming the way they are. You know your areas where you anticipate pullbacks. So now you can do re-entries in those areas if price action decides to accept in the direction you're already going in. Let me bring this back down for TikTok so they can see what's going on. And so we're kind of rejecting here in this area, right? We didn't quite make it to that high volume. We pulled back. We're coming back to the high volume of the current bar. Buyers are getting a little aggressive here, but so are sellers. But VPOC just shifted, and it just shifted again. What does that mean? That means that the high volume was here, then here, then here. That means that we're collecting some volume at the lows of the bar. So now if you're scalping, you want to get a little bit aggressive with your stop because you don't want it to rotate back in here because we do have some sellers coming in around the high of this bar. Not because of a wick, because volume is telling us that. VPOC just shifted again. More volume is accumulating at higher prices, right? Now we don't know if it's buyers or sellers yet, but the way the bar is forming, more than likely buyers anticipate the target to be hit. Target's hit. And now we can just trail up and exit on our next target. Or we can target initial balance, or we can target value area high here at 571. But we're trading in a range. So we're anticipating range bound activity, rotational balanced markets. But what happens in balanced markets? Markets on a daily perspective or a 30-minute perspective will stay in balance. But a short time frame chart like a 2-minute will become imbalanced, will become trending. So we're actually trending on the 2-minute, but imbalance on the higher time frames. So we're trading a trend here with anticipation of rotation, pullbacks. What does that give us? Opportunities to re-enter the market in the direction of a short-term trend, as long as the short-term trend stays intact. And in this type of trading, I will usually use the mini contract and not the micro. The reason why I'm using the micro right now is I'm working on a process for asset management instead of trading. As a trader, you have to be right. As an asset manager, you use inventory to get yourselves into areas that are developing and out of areas that are going against you. Inventory is size. And so instead of using stops, you use the size, you use your account value that you have in order to be able to get out of positions on the pullbacks. So as it's going against you, you dollar cost yourself into it as an asset manager and get yourself out close to a break even or a small profit as it rotates back through just a regular retrace. And you're utilizing volume to pick out your retracements. A little bit more sophisticated than a regular candlestick, but still the same thing. Same. Now we have developing VPOC in the same area. If it's a trend, we should see volume distributing higher at higher prices, not equal prices. We have an influx of buying pressure in this area comparatively to sellers, meaning that buyers are aggressive, anticipate possible continuation play to the upside because of the volume. VPOC just shifted higher. We're accepting higher prices. Accepting higher prices should bring in more buyers at the high. This is not rejection. We're testing lower areas to see if sellers are going to come in or if buyers are going to defend. It's a regular rotation. It's not rejection. It's not sellers coming into the market. It's just rotation. Testing areas for buyers to re-step back into the market. Sellers back in here at the low, anticipate price action to rotate back up into the high volume areas to test once again to see if the sellers are still aggressive on the upside. And now we have our first little area here to tell us that maybe sellers are getting a bit more aggressive into the market than we wanted. But it's not sellers getting aggressive, it's the buyers. The buyers were getting aggressive at that point in time, lifting price up. How do we know? Because we can look at the numbers here and it tells us that there was more buyers than sellers at that time and price action lifted higher. To test where? Up here in higher areas, more than likely where sellers are going to be involved. So right now we have short-term support here at this area. We have short-term resistance here at the area. Now it's time to wait to see who's in charge. And right now, sellers are in charge on the pullback. But not in an area I'd be willing to short because I'm anticipating rotation here and a continuation to the upside to probably around the 30,600 area. And now I'm out. We still haven't made a lower low. We're still in the context of an overall trending market condition higher. I'm still more biased to the downside on this day than I am to the upside. But we are in an exploratory, around exploratory highs and an imbalanced market condition higher for a trending market. So we're anticipating the highs to possibly be hit. That's why I'm not too keen on just shorting the market on a down bar. But we do have strength in this bar right now. But look what just happened. We have 385 sellers, 400, we had 500, we had 300, 300, we had 800. Sellers are drying up at the low and price actions moving higher on lower buy volume. And now buyers step in at this area with 729. And now price action is moving higher once again. Testing the high volume, moving right through it. Simply a pullback. And it gave me a signal for an entry for a long, and I didn't see it real time. So I'm sitting here now while the market's going up without me. But being around VPOC on a higher time frame, we should be anticipating rotation. Rotation, rotation, rotation. Price to spend time around that price of 46. Right down here. And that's exactly what we're doing. We're spending time and we're accumulating volume down here. More importantly. Bar closed at its high. Anticipate a continuation to the upside. And now we have buyers and sellers actively getting aggressive up here. We're going to take a shot to the downside, anticipating to at least test this area where sellers came in off of this auction. Real quick price entry on the short side, anticipating resistance up here at around the highs. And we're in an area of unfair highs where less volume traded on the daily chart around this area. And it came up and got us. And that's okay. It's going to happen sometimes. Now, price actions coming back, rotating back into this area. Buyers are getting strong. Now it gives me reasons to be looking for the upside again. And if I get stopped out here, now I'm giving it more room, right? A bigger stop because we are still trending in an upside direction. I took a nice little short here, just looking for a quick little scalp, and we just didn't come down and test the low of this bar. Okay, very small stop, very small exit, right? And now we turn around and get back in for trend resumption to the upside. Getting in at the high of a bar on a trend is okay because you're expecting the continuation. I waited for the pullback. I just got in here because the pullback, when it happened, it moved up so fast. Came back down, tested. Is it 10? We have news this day. I don't have access to see past news. I wouldn't be trading around news. So I have to wait now for 3 minutes before I could take another entry. That was unfortunate, but that's okay. That's part of going back and working on these principles and teaching them on days, right? But this is why we don't use static charts, we use dynamic charts. So we can see we don't want to trade around news, and that's why. Still looking for the long side. I do need to wait for a few minutes for this news to die down to make sure that nothing else crazy is going to happen. We do have less buyers at this high than we had over here. We're now testing the auction. Anticipate possible rotation between these two areas. If sellers are strong, they're going to get through this high volume. If buyers are strong, they're going to get through this high volume. Until that happens, they're going to rotate between the two. And then usually once it breaks, it will come back and test whatever area is the closest. So if it's a long, it will usually come back and test here. If it's breakout to the short, it will usually come back and test here. And that gives you your entries off of your pullbacks. And then you can use the other side as your stop if you want to. Have a very limited stop. And that's your breakdown, that's your pullback, that's your entry. And then you can use this little section right here as your stop. Looking for a continuation play to the downside, still anticipating some rotation in here. And we're anticipating price action to test in here, to test in here. My water ball is way over there. Now we have another auction here. Now we're anticipating price action between these two prices because buyers and sellers are talking to one another, having a conversation with each other, right? Around the same prices. And so now we're going to be stuck in a rotational range until we break out on one of the two. We test the lower one, we test the higher one. It looks like buyers are going to accept into the higher prices. Trend is still intact. And now volume is telling us this is our support and resistance. And remember, we're fading an overall uptrending market on a daily perspective right now. Okay? Keep that in mind. I'm just trying to show, demonstrate the areas right now and how to trade around those areas. That news messed me up a little bit, but that is okay. We will recover. And now we break out of highs. We're also above initial balance, which means that we have a breakout to the upside. Breakouts do one of two things. They either turn into a trend or they turn back into rotation. Because we are in around exploratory highs and an uptrend, we would anticipate this to break out to the upside. That's why I took the long. But I am expecting a possible rotation to the downside as well, because we have volume distributed near the lows and the overnights. And I'm anticipating that we're going to go back today at some point in time and test those lows. And I really don't want to take another expense. So I'm going to go ahead. Well, no, I don't want to do that because I just need one. And so we're going to go ahead and put the stop in here. I don't like the micros in terms of scalps, as they just, $25 is just not worth it. $30 isn't worth it, right? So if you're doing 10 points in movements, $50. 10 points in movement on the mini, now you're looking at 200. And a $200 move is worthwhile to at least move to a break even or like lock in $20 or so. And from an entry at 02 to 12, there's your $100 or your 10 points. That's 200. Now you'd be moving in your stop to at least a break even and then trailing it up as it's going. Because you are looking at rotation here into the high volume, you could rotate or put your stop on a trailing right down here below the high volume, anticipating that if it gets down there to that area, it's going to come back down and rotate lower. We just don't have any form of one-way movement right now, kind of in a market of what people would call chop, right? But the range is wide enough that it's tradable. You just have to be you just have to pinpoint your entries a little bit in order to be able to pick up on that rotational market condition. Starting to reject the highs a little bit. And let's see what's going on at the highs. We have a lot less buying coming in to this high. 600, 700. We only have 200 and 200 so far. A lot less buying coming into the highs. Now we have to look at the sellers. 400, 200, 100. Less sellers coming into the market, and less buyers is not good for the upside. We came through that area. We have an area of resistance above us now. I want to be out. I'm looking for price action now. This bar to close, price action to come back up into this area, developing area, and looking for a possible short position. The only problem with this chart, especially in this platform, is difficult to align it to the 16 by 9, the format for shorts, because of the scaling of it. And it looks like we're just going to go ahead and continue to trend today. And so I'm going to hold off. I'm going to wait for a little bit for this to kind of develop. I still have my premise of what I'm looking at. Price action still doing nothing but going up, right? Ever since the market opened, we've just been moving higher. News messed me up just a little bit, tripped me up, and now we are just moving higher. And in a trending market condition, right, when you have a high that closes or bar that closes at its high like this, you should anticipate a continuation to that move. Anticipating a little bit more of a pullback on this because of the move that we've had without a pullback between these two bars. That's better. Testing where buyers, the higher volume stepped in, testing where the higher volume is above us. And now we're just going to be in this little range for a little bit until one side breaks out comparatively to the other. And because of the trend here, right, anticipating it, of course, to move to break out to the higher side. There it is right there. Okay. But wait. Let's shut this off real quick. There we go. We came right into this area of support. I'm going to go ahead and buy one down here, anticipating a continuation to the upside. And if we come back down into this area, I'll buy another one and dollar cost myself into the trade itself. In two right now. So being in two, I want to sell one. Let's see here. And put it right below this high volume. right below the high. So we're going to want to sell one there. Price action continues to move down. We're going to buy another one in here. We're just waiting. Market's kind of lulling me to sleep right now a little bit. I'm so tired. I've been streaming so much the last few days. Not just streaming a lot, but been up at 3 o'clock in the morning, trading the London session, just doing all kinds of stuff. All sorts of stuff happening. So I'm a little tired. Apologize, I'm not as awake and talkative as I normally am. Usually I'm doing all sorts of discussions and education about what the market is doing at the moment, and I'm just not feeling any of it right now. If anybody has any questions, though, please definitely ask. Ask away. Give me something to do before I fall asleep here in this chair watching this market not do anything. Price action is moving nicely now, directionally. Not because it's, moving in the direction of my trade, it's just moving directionally. Anticipating that high volume up there to be like a magnet to price. Here, hold on a second. I'm going to go get my water real quick. I'm going to be back in just a second. Okay. Better. Oh, look. We're rotating back down again. Go figure. This profile right here was key for me today. Key. The way that this is distributing price. High volume up here. Another node of high volume here. and the high volume here. I'm anticipating price action to start moving down into these lows. I recognize that we're in a trend on a daily perspective. I recognize that we are on a trend in a 2-minute perspective at the moment. And so I'm being very cognizant of both. But I am anticipating a rotation to the downside. Golf, how's it going? Welcome, welcome, welcome. It's good to see you. Or should I say Jason? And now we're starting to see a possible what could be the first forms of a break of trend here in the 2-minute chart. And not because of lower lows. Look at the volume. Look how volume is distributing, right? Look at this area right here of resistance, support resistance that we're forming here. Okay. Now we have rejection up here. We've got it confirmed from a lower low perspective. I'm going to be looking for a pullback here, and I'm going to want to adjust my positioning to the short side. This is where I'm anticipating price action to start coming down. I don't want to take in this type of expense though, so I'm going to wait for a pullback. And then I'm going to go ahead and start positioning myself into the short side. And I'm going to show you exactly how I'm going to go about doing that. You playing golf this weekend? Golf? Just out of curiosity? It's the 4th of July. Or is it too hot out there? Especially being in Alabama, Louisiana, Arkansas. I knew I would get it. Just took me a second. You're headed to the beach? Nice. Destin, Florida. Even better. Even better. That's so awesome. Good for you. I hope you guys have an absolutely amazing time. My family's going to Myrtle Beach this next week. I'm staying here to work. But yeah, they're headed out there, and then they're headed to Florida, St. Pete. The end of this month, and I'll be staying here too. I just have too much stuff to do. I really want to be short right now. I was trying to demonstrate how to trade a trend up here, and I really, really, really wanted to be short. Let's see here. And I'm not seeing anything right now for a potential pullback. I'm only seeing acceptance to the downside. I haven't been to Destin. Destin. I used to live in Oviedo, over by Orlando, pretty close to Central Florida, the Black Knights, and then we have a condo in St. Pete. Yeah, this is not a pullback. There's acceptance there. So I got to wait on this. I really, really, really want to be short. that trade today live kind of threw me for a loop a little bit. I wasn't planning on coming in here and doing what I'm doing right now. Habits die hard though, right? Um, I really want to be working on, and I wasn't planning on being on this day. I was planning on doing yesterday, and I picked the wrong day. And this day is a very interesting day because of all of the distributions in here. And so I'm looking for a possible pullback down into the lows because of the amount of volume that accumulated in the overnights. And I really want to be short, and the market's not pulling back at the moment. It's not cycling through the volume areas well either, which is difficult to be able to read the pullbacks and those type of things. And it usually happens around time frames of a change in direction, a shift in an overall market direction. You know, we're not getting the pullbacks into the higher volumes right now. We're just moving. Now let's see if we can get out of this market right around here in this area. Perfect. Beautiful. So now we're out of the long. Now we can go ahead and start looking for the short positions. Because this is where I really wanted to be. I wanted to be short, up in this area right in here. That's not going to happen now. But we do have this area here. I'm going to go ahead and pop in one short here in case this decides to go. Now I'm happy again. Really did not like to be in that long. All right, good. Okay. Out of the long, into the short, holding short. I love leaving inventory left over. Love it. And I'm going to have to adjust this a little bit because I did exactly what I wanted to do, which is break the asset management to see how it breaks, right? Well, I know how it breaks down because I just broke it today in the live session. So now I know that I'm going to need about $15,000 to $20,000 cash account in order to be able to do it. But I'm also working with that other company still in talks. I think I'm going to I know they already have it. You can go into a brokerage account with them. I want to get an idea of how long that's going to take from once you go into a funded. And the reason being is that brokerage, you can leave funds that you make in there. And if that's the case, I'm going to take this back off of the micro again. I'm going to go back onto the mini, and we're going to work with the 5 minis that we have, and we're going to figure out the risk reward structure that we're going to be able to utilize to get into the brokerage, start building the cash value that we need. Then once we have $15,000, $20,000 in cash, now we turn around and now we start doing the asset management, because we're going to need inventory in the minis of about 200 to 250 contracts in order to be able to do that. And if it's a 5,000 drawdown that they have on 50, right? So it's just times 5, you need about $25,000. Because 50 times 5 is 250, right? You take 5,000 times 5, you need about 25,000 in order to be able to do that right and do it well. Now it's coming against us, which is just fine. This is the area here where I'm looking for another one. So we're going to go ahead and short another contract. anticipating this 364 to be tested. So 30,364 is what I'm anticipating to be tested. I'm sorry I'm not near as talkative today. I'm extremely tired today. I kind of wore myself out trading the London session at 3 a.m. I knew that was going to happen, but I got caught up watching the soccer game last night, the U.S. against Bosnia Herzegovina. So I'm a little tired today, so I'm not near as talkative as usual. This isn't about teaching right now. This is about me trying to keep my eyes open as I'm watching this market right now. I'm waiting for this high to be broken. I want to see what happens at this high. I want to see if buyers are still aggressive in this market or if sellers are going to start to reject some of these highs. And right now it's just accepting. And this is in that market shift, right? These are the markets, these are the days that I trade very, very poorly. It's the market shift. What is the market shift? We're in an uptrend. We are absolutely in an uptrend. We've only had a few days of pullbacks trading in an upward market condition. This day here is a little bit different. We have a triple distribution with large volume at the downside, which is a market shift. So I'm thinking short in an overall trending market condition higher, and I'm getting chewed up a little bit here on this day because of that. Now, what's the difference between this triple distribution? Why wouldn't I look at this low being tested? Because our volume distributed in the unfair highs. I'm anticipating price action to come down into this area, reject, and price action to come back and test in here. It's the same exact thing. It's that same exact idea. It's just backwards. This one here, price action to come down here to pull back into this area and then continue in the upside. This one here, I'm anticipating price action to come back down and test into here. But it may not do it today. That is the key. It may not rotate down there today, but check this out though. Here's your buyers at 433, right? Buyers at 418, 300, 400, 480. Look at this over here. 600, 400, 800. See the buyers are drying up. 500, 400, 200. 200, 400, 300. Same amount of sellers, buyers drying up. There's your rejection. There's a reason to add another contract. Added a little bit too high, too low there because I was looking at the other chart, but there it is. Now, I might be stuck in an idea here that we're going to rotate lower when all actuality on this particular day, we may end up rotating higher, and it may not be until the next day before we see the rotation lower. I wish I would have thought of that before I started trading this particular day. And then I can't see historical news events. And so we had a news event here at 10 o'clock that I did not, that I couldn't anticipate there was news there, and got stopped out on that particular position as well. broke the high. Buyers are strong in here, anticipating this high to continue to be broken. And this is going to be our last area of resistance. If this breaks, we're going to probably break these highs over here. This is going to be that last little stand for the short side at the moment. But everything I have done so far on this day is just like immediately gone against me. It's crazy. But this is also one of those market shift days, at least in the context of how I read shifting conditions to the market. Come right back down into this area. And this is support that I noticed from back here. And we're just absolutely holding that as support. We broke through it. We came to it, held it as a rejection, traded through it, held it as support, and we're still holding it as support. And of course, an overall trending market condition higher on the 2-minute chart. And so I'm fading the trend, which is always a fun thing to do. I suggest everybody does at least once in their life. Don't try to do it any more than that, but yeah, definitely fade the trend at least once in your life just so you have the experience. It'd be fun, they said, you know? Increase delta over here. Rejected unfair highs on the 30-minute perspective. That was the position that I wasn't able to get into because I was still long. That was from that move over here. Traded through this area. Let's see if we can get down below it. Wanted to sell another one right through here. We're going to do that. And sell one more through there. We're going to have 4 on. I'm going to go ahead and grab a target at 42. So I'm going to put that at 43. Good, move on. And so we're going to go right about here. I'm going to put 1 in down here. The reason being is that's a VPOC. I want to be out at VPOC just in case we see some rotation in there, and I can just trade around this range and keep adding 1 into this area. But then I'm also going to target 1 at 464 in case we get there. I want to put a limit in there as well, because at 464 we have another high volume node, and in case we get down here, I want to be out with 1 here. And then my third one around 418. And we're doing this in the context of a day trade. And so we're taking scalp entries and we're going to scalp around VPOC. It gives it to us by one contract, one contract, one contract. And we're going to hold the fourth one because I'm still looking at the 350s as possible on this day. And price action's not moving down far enough yet for me to be able to really be rotational with it and adding into shorts up here. We're just not getting the extension down that I need in order to be able to do that. I don't like the fact that we extended lower and just immediately rejected. Price actions moving higher now, as would it be expected from that type of move. And our higher highs are over here. So I'm going to scrunch this chart up a little bit just so I can watch the highs and see how we react to some of the areas over here on this side. I really want to see how we react in this area. There, that's better. Looking for potential rejection in here, but this bar is so close, almost at its high. I'm anticipating this high to be broken. And again, I'm anticipating a rotation to the downside that we may not get on this particular day and may not happen until tomorrow. Because when we're looking at those rotations, it's always happening on the next day, not within the concept of the current bar. I might take my first expense day here on this day. And I haven't had an expense day in quite some time. I might take one here. Because I've completely read this day wrong. And I'm not used to that because I don't do it very often. Jeez. Oh, good times. And I'm off. I'm off from, and I know psychologically right now that I'm off comparatively to, or due to that session this morning. And because I'm off as well, I have to, this is part of the demonstration, right? In the lab, we can have our processes of building all this stuff. But if we adjust the way that we think or the way that we formulate our decisions at the live edge, we're going to act differently than we normally do. And I'm wondering if that's part of the process here too. And that's part of the human performance lab. It's part of the performance portion of the lab itself. So this is the human performance that we're seeing now. And I'm that it's going to be interesting to see what would happen on another day that isn't a shift day like this. Do I still have the same experience? let's see here. And I don't have anything that I'm able to get any different context on. Nothing. That and am fatigue. I am extremely tired. And so, again, those might be two things that are going on, well, three things, in combination that are going on that I'm just like, okay, my performance is just not there right now. But this is part of the whole process. This is part of the whole experiment. If this didn't happen, if the markets didn't bring this change about, right, then this wouldn't be a lab that I would be able to experiment in. And this is the part that we really need to see as well, because this is a part that triggers the overtrading, that triggers the fear of failure, that triggers whatever it is inside of us that that knocks on the door of our lack of trust in ourselves. And when that gets triggered, and we all have it, right? It's different triggers, but we all have it. We all experience that in some form of another, that lack of trust in ourselves. And when we have that lack of trust in ourselves, even just a little sliver, right? We start questioning what we're doing. And that's how we know we're no longer on the court. And I'm not questioning what I'm doing yet. I'm trying to find answers within the charts to help me see if I'm missing something. But everything is telling me that I'm spot on with my with my reasoning and my thinking and what this market is currently doing. It's that we're in an uptrend, so we should be long, but market is telling us that we could be testing lower prices, which is keeping me from going long and putting me into the shorts. And it's that market shift. And I just don't like the shifts because I don't trade them well yet. And these are the days that I need to practice the most. And I don't want to practice this right now by any stretch of the imagination. I don't even want to be doing this at the moment. And that's another insight, right? Means that I'm not comfortable. We're comfortable in things when we're comfortable with something. And I know using the same word to describe an idea is not the best way of coming across and explaining an idea. But we're comfortable when we're comfortable. We're uncomfortable when we're not comfortable. And right now I am 100% uncomfortable. I am not enjoying this process at all. I'm like, screw this, guys. I'm going home. Start the weekend early. Oh, man. It's too funny. Taking my toys and going home. This is ridiculous. But what can we glean out of this, right? What's the information that we can get out of this? Well, first of all, right, I was in that long and I was able to get out of that. I was able to get out of that long and I was patient. I was waiting. I wasn't seeing any form of pullback starting to form or anything along those lines. And I was waiting and I was very patient through that process. That tells me that I'm still participating because for me, naturally, I'm an impatient individual. When that impatient shows up, it means that I'm usually not on the court consciously participating in my life. here I was very, very patient. I didn't like it because of what happened this morning, but I was still patient. And now I'm still patient too. I don't like it, but I'm still there in the moment. And I'm not quite sure what to do with this market condition. And I think that's why I don't like this, because that irritates me. Because I don't like not knowing what to do when I'm in the market. Because I know what to do so often. You guys have seen it. And it's these days that makes me question. But this is going to come back and break these highs. And if they break the highs, we can just absolutely start. No, no, don't do that. Oh, good, 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 good. Okay, then we're fine. And if we break these highs, we have a chance of screaming. And if we scream up higher, the chances of trying to get out of this position through asset management is going to be extremely difficult. But I'm going to try it. I'm going to try to do it anyhow, because this is an excellent test for it. So let me get out of my little funk here and put my game hat on. Hasn't yet happened yet. We're seeing a retrace, but I'm not getting excited to the downside at all. This is higher probability speaking. It's going to come up and it's going to break these highs. I mean, that's all there is to it. This little down move right now is one of those things of, giving you hope, right? In a land of despair. Not that I'm in despair. I don't care about the result. That's not what I'm looking at. What I'm looking at is the market doing as I intended, as I predicted, as I built my plan around to do? And it absolutely is, because I saw the upside potential. But then I saw the downside potential, and it's the downside potential I chose to act on. So it's not the plan that was messed up. It's the way that I acted and I traded the plan today. So now the market is going to turn around and break these highs. I'm actually going to speed this up a little bit, not because I'm impatient, but because I want to get myself into a place where I have to act instead of just waiting and watching this market. And part of replay, is the ability to fast forward. So I'm going to utilize that ability, but I'm not going to go too fast. And when we start coming up into this high, I'm going to move it back to normal time again. Why? Because it's this instance of this break that I want to experience. Because how do I get myself out of a short in a trending market condition using asset management with limited inventory? See if I can do it. I don't know. I don't know if I can do it or not. We're going to find out though, because I'm going to try it. Oh, this is going to be fun. I'm probably going to fail miserably on this, because I'm trying to visualize it in my head, and I can't see it. I can't see it at all. All I see is that a trending market condition just keeps going against me. And that's not going to be productive in terms of trying to get out of the market. The wise thing to do at this point is to take the L, take the loss, put the stop right above here. If it touches you, you're out. It's the same thing to do. Okay. But I never said I was intelligent, ever. All right. So I'm going to try to get out of this through asset management. It's the only other thing that I can think of that I can use this experience for as a lesson for me. Not a lesson for you guys. I'm not teaching anything right now to anybody other than to myself. And sometimes the greatest lessons are the ones that we do need to teach ourselves, that we need to know ourselves. And this is all part of that process. And if I'm not demonstrating this in the lab, I'm only demonstrating the good days. What is that going to help you guys when you get into your own bad days? Because we're all going to have bad days in the market. You can't be in the market and never have a bad day. We can have good runs for a while, but there's always going to be some form of condition that's going to adjust things to what we planned on them to do. And this is just a regular pullback right now, coming directly back into my area. We really haven't broken out of here yet. So I'm not going to use this as the pullback to get me out. Again, the smart thing to do is to put a stop in and just take the loss. But what happens if one day I'm not aligned to doing the smart thing? What do I do at that point in time? And I'm waiting for this to break. Now, if I wasn't going to run this experiment and have this inventory, I would be adding one there before it came down, because this is the exact place where we'd be looking for potential rejection to come into the market and it's move down. And this would give me a place above in order to be able to rotate and scalp out of a position. Now price action rejected from that area, and now we're trading higher. And I'm going to go ahead and move this forward just a little bit more to see if it breaks. Waiting for it to break. Does it break here? It looks like it wants to. This definitely is setting up for a break. This is definitely a trend-like move. You come down. And see, and here's the thing, right? We're not even testing into high volume right now. That's the key, right? We're not doing anything that I would normally look at as a normal market condition. This is not a normal day. We're not rotating between our areas like we would expect. We're breaking out of them. We're extending below them. And we're extending below them in volatility just to revert again. It's almost like there's a force in the market on this particular day that is positioning themselves in the market in a particular direction. And then there's enough movement on the opposite side to absorb that, but then they come back in. And then it's absorbed, and they come back in, and it's absorbed. But it's not being absorbed by normal market mechanism. It's being absorbed by other participants, not the normal mechanism. And there's just something off on this day. Because we're not behaving like we normally do. I can't even commentary on this day because I'm not seeing the rotations, and we do see some rotations like this bar. But where's the test of the high volumes that we normally see? Interesting. See what happens when you show up, right? When you show up and you choose to participate in the moment, you start seeing things. Now here we see a little bit of rotation. That's a market rotation right now. We're holding support, coming back up, testing resistance, coming off of that, retesting support. Breaking through support a little bit, buyers actually coming in there. If buyers are strong, we're going to come up here into the 29 area. Didn't do it. Sellers are coming into the market, rejecting at the place of support. It's not just me. This day is just different. Oh, that's really good to see. And if it's a different day, that's when we turn around and we put our stop in and we put our risk in, because I'm not going to be able to asset manage myself out of this at the high if that's where it goes. Because this is not a day aligned to that, and I have to accept that. But I wouldn't have known that until this bar came in, and the sense of uncomfortability was because of the market not behaving the way it normally does. And today is a market shift day, not behaving like it normally does. It's like I got the key, and the key, is now open the door. The door's open. I'm not ready to walk through the threshold because I don't know what I'm walking into, because I don't know the result of the trade. But I do see that today's market mechanism is different, very different. It felt different. And now that I've been able to put my finger on it, I have confidence in the market again, because I can recognize and articulate what it's doing differently. I felt it, I recognized it internally, but I couldn't put my finger on it until this bar. That was that's the only bar so far today that the market mechanism made sense. And not because it's a down bar moving into my direction. It has nothing to do with it. It's the way that bar formed. See, this bar here is not rotating back. And it's not because it's a trend day. We're a trend day, but we still see rotations and trends. And this thing is just not behaving the way it normally does. And there's my lesson. And here comes my stop. And I can take a down day. It's not catastrophic. It's going to happen. And it's not a catastrophic down day. We're talking about less than $500. And that's it. Done. And now I don't have to deal with this day anymore. That's just a weird day. Well, on that note, thank you everybody for attending. I truly appreciate you very much. I hope you got something out of this. Not a lot of teaching, not a lot of anything. I am just a little off right now from this morning, from all of the streaming, from trying to be up at 3 a.m. I need to figure this out, and I'm going to figure it out. We're in the second week of this experiment that I'm running, right? This project. And sometimes in new projects, you have growing pains. And I'm going through one of those growing pains. It's just a little tiny bit. On the 9th day, I've had a great run. I've had 8 days of a brand new project with 0 growing pains. It's been phenomenal. Today, a little bit of a growing pain. Beautiful. Today, I'm going to get some sleep. I'm going to work out. I didn't even work out yesterday. I'm going to work out. I'm going to get done with the things that I need to take care of myself. I'm going to bed early. Doing all the things that I need to. So tomorrow morning at 9:40, I can show up and we can get back to business, bring the project back online and get ourselves into this, because this is important, because this isn't just about me. Jason, thank you. I appreciate that. I will, definitely. He said, get some sleep, because this isn't just about me. This is about you guys. You guys are here because you see something in me that I'm providing in value. And if I don't show up the way that I have in the last 9 days, I'm not providing that value. And that's just not okay for me. That doesn't make a lot of sense for me. So, Jason, thank you. I appreciate that. Thank you for still being here. I truly appreciate that as well. That shows me that even in my worst of times, those that have shown dedication here are still here. And that means everything to me. That gives me the drive to continue going. As long as you guys are here, as long as you guys are here still showing up, I need to show up and I need to be at my best in order to be able to do that. Truly appreciate you, Jason. Thank you. I needed that. Everybody, thank you so much for being here. If there was something of value that you found in this video, please hit that like button. If you haven't yet and you did find something of value in this video, why not subscribe to the channel? That way, if there's when new videos come out, they might help you as well. And if you're feeling really generous, leave a comment in one of the videos. It really does help. The algorithm does look favorably at that activity, and it helps small channels like mine get out there to other people that this information could help as well. I want to thank each and every one of you for being here as well. You're a key instrument to my own development through this process. We're going to get there. I'm going to get there, and we're going to make this happen. So close. And I really needed a day like this, I think, to bring the project online in an even more meaningful way. And I already have some ideas. I'm going to formulate those tomorrow after I've gotten some sleep and work on those this weekend if they still seem valid. But again, thank you so much, everybody. Jason, Maddie, Just Shorts, you guys are amazing. I look forward to tomorrow. Well, tomorrow is Friday. It's a 4th of July holiday on Saturday. I will not be streaming tomorrow because of that, but I will be on more than likely at 2 p.m. to work on stuff. And I'm going to be streaming all weekend working on things as well, because this project, this is the most important thing right now. And that's what I'm going to do. So I won't see you guys at 9:40 in the morning tomorrow morning, because there's not going to be any trading for me tomorrow. But I'm going to show up at 2, and we're going to get back, and we're going to do the day before yesterday. This is Thursday, right? Tuesday and Wednesday tomorrow. And if I don't get to Wednesday tomorrow because I get stuck on Tuesday, then we'll go through and do Wednesday over the weekend. Thank you so much for being here. I truly appreciate it. Jason, have a great time this weekend. Enjoy Florida. I hope it's not too warm for you down there. This weekend, I guess we're supposed to be kind of in a heat wave. Stay safe. Have a great time. Enjoy yourself. Thank you so much, everybody.